What's up, guys? Chimp here with another very quick market update. It's quite late here, but I'm going to be out of town for the next few days, so I figured I'd record a quick one before I do head out and talk a little bit about what's going on with the markets. And so, a couple of days ago, we printed this SFP above the 123.3K top. Basically, we ran that level, immediately rejected, and now we've sort of come back into the mid-range, like bottom of that mid-range, and we're just sitting here. So the question is, what's next? Um, so obviously with this dump, we had a lot of leverage that built up. I'm gonna get rid of this one. You look at like where open interest was, let's say, I don't know, 24 to 48 hours before we pumped, it was at like 100 billion. I mentioned this on one of the videos, like, hey, this is like a big red flag. It's like 112, 100, like at the time I think it was, right around here, and it got as high as 114, and clearly we wiped a good amount of that out, right? So it's now back at 102 billion. My personal take is, again, like, this is still so high, right? When we quote unquote wiped out to 112, interest reset to 88 billion. And when the first time it went to 123K, open interest was at 90 billion. So like, and before that it was at, I think it's gonna load here in a second, it's around 70 billion. So we're still super elevated, right? It's not like the market deleveraged. People look at this and, I've seen a lot of this cope like, oh well, we had a lot of liquidations, like that was the reset. At tops, you can have multiple liquidation cascades on the way down, and that's not a problem whatsoever. And I'll show you a historical example of that in a moment. But when I look at global open interest, again above 100 billion, still think this thing's very frothy, and I don't, mechanically speaking, can we bounce? I guess it's possible, but what I'll talk about in a second is like, I don't even know where the bid comes from. So, you know, I don't see the hyper bull case, I guess you could say. So I want to show the historical example of these wipeouts because again, people will look at this and say like, dude, look, like we wiped out, like, and that was a reset, right? So let's take a look historically at an example that I like to look at, which is that 65K top. And I remember it like it was yesterday. Um, we had many wipeouts on the way down. The initial liquidation after 65K was we had this big wick to the low 50s, and we sort of chilled there for a couple days. And then we had a secondary move. It wasn't like a liquidation cascade per se, as much as more I'd say controlled selling. But yeah, we had that move. And then we had another liquidation cascade from like 59 to 50 or so. And then we sort of bled out, controlled selling until we hit 40. And then we hit like our third liquidation cascade. So what's my point? And by the way, this was an SFP too. It just took a couple days to sort of print out. What's my point? You can look at this and say, oh, well, we've had a leverage wipeout. Sure, but leverage is still quite high. Now, could we get a scenario like where things float back up and maybe we go to 126 or 128 and open interest goes to 120 or 125 billion? Sure, but I think it's pretty unlikely. Which leads me to my point, like, okay, who's the bid here? Because, like, again, we got to think about this market logically, right? And I remember at the FTX lows, and actually I was looking at some of the videos I published, and I privated all of them sort of when I restarted. But looked at the FTX lows, like it was kind of clear that sellers were running out of gas at some point. And I think you can look at this market now and say it's very similar on the buy side. So I'll talk about the ETFs first. Again, for a market that's been going up, basically for the last week and a half, the ETF flows have been rather weak, right? Like, and in fact, today again we had outflows. So to me, like the ETF is stalling out, right? This thing's not really providing much liquidity. And then you look at all the treasury companies, right? I'm trying to pull up that David Bailey tweet. These guys are totally deployed. Like Sailor is behind like $10 million a week or something now. Um, Basically, all these guys are like cooked. And I want to show the David Bailey tweet because again, I keep going back to this because it's such a like he was sort of the last treasury, and he basically top blasted, right? That's what he did. And in these guys' minds, it's like any price you pay is a good price because, hey, Bitcoin's going to be at 500K or Bitcoin's going to be at $1 million in 3 years or whatever they say. Like, this is the type of tweet you would read at a market top, not at a market bottom. Or rather, I should say, this is not the type of tweet that you would see at a bottom or anywhere close to a bottom. The hubris and like the what's the word I'm looking for here? Sort of the brazenness to make a statement like this. Again, this is the type of thing you say when times are clearly euphoric. So, what's my base case for this market? I don't know who the buyers are going to be if it's not treasuries or the ETF. I think that ultimately, like, we're going to start to bleed out, and at some point we're going to hit a point where things accelerate. I'm not personally interested in buying dips. I don't think buying dips is a reasonable strategy. I think there will be a time when you can buy a dip and the market's going to go up 20, 30, 40% very quickly and you can make a shitload of money. But I think we're sort of in this scenario where this could be a low time frame dip to buy, right? But ultimately, I think buying like this level and holding for 2 months or 3 months is going to be a mistake. So, anyways, guys, I figured I'd record a super quick one. Again, super tired, so apologies if I sounded a bit incoherent. And until next time, take care, everyone.